Let's be honest, the US dollar feels invincible. It's the money of oil, trade, debt, savings, big business. It's everywhere. But here's the problem. Every empire in the last 500 years thought the exact same thing about their currency. The Spanish thought their silver coins would rule forever. The Dutch thought their guilder was unbreakable. The British were sure the pound sterling would always be the backbone of global trade. They were all wrong. And when you zoom out and look at history, you start to see something weird. They all followed almost the same script, the same 7 stages, the same rise, the same peak, and the same slow decline. And whether we like it or not, the US dollar is walking through those same stages right now. This isn't a "the dollar dies tomorrow" video. It's not conspiracy stuff. It's simply what happens when a currency becomes so important that the world builds everything around it, and then slowly realizes that nothing lasts forever. So in this episode, we're going to walk through the 7 stages that every reserve currency goes through, and see exactly where the dollar is on that curve. By the end, you'll understand why the real question isn't, will the dollar fall? It's, what comes after it? Every reserve currency is born in a moment of chaos. Not when everything is calm, but when the old system stops working. In the 1600s, Spanish silver flooded the world, and then collapsed under debt and war. Traders needed something more stable, more predictable. Enter the Dutch guilder. In the 1800s, after the Napoleonic Wars and endless European conflict, the British pound stepped in as the reliable anchor. For the dollar, the moment came in 1944, near the end of World War II. Europe was bombed. Japan was bombed. Factories were rubble. Currencies were a joke. The only major economy left standing with industry, gold, and political stability was the United States. So at Bretton Woods, world leaders basically said, okay, from now on, the world runs on dollars. Other currencies linked themselves to the dollar, and the dollar linked itself to gold. That was stage 1. The moment when the US didn't just become a big country, it became the central bank of planet Earth. From there, things accelerated fast. Once the world agrees on one main currency, everything becomes easier. Imagine trying to trade if every country used a completely different unit of length, a different calendar, a different clock. Total chaos. A reserve currency is like everyone agreeing, okay, whatever we argue about, we at least use the same ruler. For the US dollar, this created a feedback loop. Countries needed dollars to trade. To get dollars, they sold goods and resources to America. America bought everything: cars, oil, steel, electronics, food, because it was rich and growing. Those dollars spread across the planet. And once you had dollars, you stored your savings in dollars, priced your exports in dollars, and borrowed in dollars. Even today, most global trade, most commodities, and most cross-border loans are still priced in USD. That's stage 2. The currency becomes the language of global trade. And at this stage, it feels unbreakable. It feels like, this will never change. But history says, as soon as everyone is all in, the system quietly starts changing underneath. Stage 3 is where things get interesting. At first, the currency spreads because people use it to buy goods. Then, slowly, they start using it to buy money itself. For the Dutch, Amsterdam turned into the first big financial center. For the British, London became the global clearinghouse for trade, credit, and insurance. For the US, Wall Street became the engine of the empire. The American economy shifted from "we build things" to "we design financial products." Instead of exporting just cars and machines, the US exported government bonds, corporate bonds, stocks, mortgage-backed securities, derivatives on top of derivatives. The world didn't just want dollars anymore. It wanted access to dollar assets. And here's the catch. This stage feels like pure genius. Everyone is getting rich on paper. Returns are high. Financial innovation looks like magic. But history is brutal. Whenever an empire makes more money from finance than from real production, it becomes vulnerable. Because the whole thing starts to depend on confidence, leverage, and the assumption that people will always trust your system. Once your currency becomes the backbone of global trade and finance, you're not just a country anymore. You're the unofficial manager of world stability. Ships need to move safely. Sea lanes need to be open. Piracy needs to be contained. Choke points like the Suez and Hormuz need to be secure. Portugal tried to do this with a small empire. Spain tried to do it while drowning in New World silver. Britain did it with the Royal Navy, which policed the oceans for a century. The US does it today with aircraft carriers in every major ocean, hundreds of overseas bases, security guarantees for dozens of allies, constant involvement in regional conflicts. Some of that is about ideals, but a lot of it is about protecting the dollar system. If your currency is the one everyone uses, you have a strong incentive to keep the world's arteries open, even if it costs you trillions. Stage 4 is where power becomes expensive. You can still afford it, but the bill is getting bigger every year. And the returns? They slowly start shrinking. Now comes the stage every empire swears it will manage responsibly. And every empire completely fails to manage. When the world trusts your currency, it loves your debt. The Dutch could issue debt cheaply. London could sell British bonds to half the world. And the US has taken this to another level. If other countries want a safe asset, they buy US treasuries. If their central bank wants reserves, they buy treasuries. If investors want risk-free yield, they buy treasuries. So what does Washington do? It issues more and more and more. Why raise taxes or cut spending when the entire planet is lining up to lend you money? The problem is simple. Borrowing is addictive. Deficits feel painless until they don't. At a certain point, interest payments get huge, politics gets stuck, and changing course becomes almost impossible. This is where the US is today, in the financially comfortable, politically paralyzed phase of the cycle where everyone agrees there's a problem. But nobody wants to be the one who pays the cost to fix it. Now comes the stage every empire swears it will manage responsibly, and every empire completely fails to manage. When the world trusts your currency, it loves your debt. The Dutch could issue debt cheaply. London could sell British bonds to half the world. And the US has taken this to another level. If other countries want a safe asset, they buy US treasuries. If their central bank wants reserves, they buy treasuries. If investors want risk-free yield, they buy treasuries. So, what does Washington do? It issues more, and more, and more. Why raise taxes or cut spending when the entire planet is lining up to lend you money? The problem is simple. Borrowing is addictive. Deficits feel painless until they don't. At a certain point, interest payments get huge, politics gets stuck, and changing course becomes almost impossible. This is where the US is today, in the financially comfortable, politically paralyzed phase of the cycle, where everyone agrees there's a problem, but nobody wants to be the one who pays the cost to fix it. Here's the important thing. Reserve currencies don't usually end in explosions. The Dutch guilder didn't vanish overnight. The British pound didn't just die. They slowly got replaced. Trade deals started happening in other currencies. New financial centers rose. New alliances formed. The old empire simply became just another country. That's almost certainly what will happen to the dollar. It won't vanish. You'll still see it. It will still be important. But over time, more trade will be done in other units. More reserves will be stored in other forms. More people will diversify away from a pure dollar world. The center of gravity moves, even if the old currency is still around. Whether the next system is built around the yuan, a basket of currencies, regional blocks, or something digital, the pattern is the same. No currency gets to sit on the throne forever. Losing reserve currency status feels dramatic from the outside. From the inside, it often looks like a country finally dealing with reality. Britain didn't disappear when the pound lost its crown. It rebalanced. It shrank militarily, shifted its economy, and found a new role. The Netherlands didn't vanish after its golden age. It became a smaller but still prosperous nation. The US will likely follow a similar path. Less, we run the world. More, we take care of our own house. Less global policemen, more one big power among several. That doesn't mean everything gets better automatically. There's pain in transitions. But it does mean this isn't automatically the end of America. It's the end of one specific phase of American power. The phase where everything, everywhere, quietly depends on the dollar. If we have to pin it down, the US dollar looks like it's sitting between stage 5 and stage 6. Debt explosion, already here. Financialization, deeply here. Military overstretch, expensive and ongoing. Early loss of confidence, starting now. We're not at game over territory. We're at this is getting harder to sustain territory. Think of it like an athlete at the end of their prime. Still strong, still dangerous, still better than most, but no longer untouchable. Some countries are betting the dollar stays on top forever. Others are quietly training for the moment it doesn't. You don't need to panic, but ignoring it would be dumb. This might sound like a big abstract macro thing, but it hits you in places you actually feel. Rent, food prices, job security, interest rates, investment returns, currency value in your own country. When the global reserve currency is under pressure, governments react. They print more, or they raise rates, or they cut spending, or they load up on debt. All of that flows down into how expensive stuff is, how hard it is to save, how unstable your economy feels. If your country borrows in dollars, a strong or unstable dollar can wreck your budget. If your savings are in a weak local currency, a global shift can destroy your purchasing power. Understanding the cycle isn't about predicting doomsday. It's about not being the last person in the room who still thinks nothing ever changes. The most likely future isn't dollar dead or dollar forever. It's something in between, a world with multiple strong currencies instead of one dominant one. More regional trade done in local units. More savings spread between currencies and gold. More digital payment systems that don't touch the US banking network. The dollar will still matter, but it'll share the stage. For investors, that means thinking globally. For governments, it means less free credit. For regular people, it means more volatility, but also more chances to protect yourself if you understand what's happening. We're not heading into a clean, simple world. We're heading into a messy, confusing, multipolar one. And in that kind of world, people who don't understand the game get played. Every empire thought the pattern would stop with them. Every reserve currency thought the rules had changed. Every leadership class said some version of, yeah, but this time is different. It never was. The US dollar won't vanish overnight, and nobody sensible is saying that. But it is moving through the same cycle that swallowed every currency before it. You can't vote that away. You can't argue it away. You can only recognize it early and adapt. Because at the end of the day, money is not just numbers in a bank. It's a story about who holds power, who has trust, and who gets to write the rules. And right now, whether we notice it or not, that story is starting to change.